Hey everyone, welcome to this episode, part number 3, reaccumulation. In this video, we're going to be talking all about reaccumulation. And now, reaccumulation, guys, is going to be very, very similar to accumulation. However, the big difference here is that reaccumulation occurs inside of supply where you believe price would reverse. However, what typically ends up happening is it starts to create a higher time frame RBR. It will actually create a range and then break the high, which then creates your high. So a reaccumulation, guys, in most cases is going to represent a higher time frame rally-based rally. And we're going to be able to go into these different types of reaccumulation patterns and start to dissect what takes place inside of, as you can see here, a 5-minute reaccumulation that formed a 4-hour RBR. And over to the left here was supply. And instead of falling, price just mitigated some imbalance and kept going, which then reaccumulated price to make even a higher high. Okay, and so this would be price basically tapped into some sort of supply here. Instead of filling the imbalance, it actually created an RBR and then kept going to the next zone to the left because it wasn't finished its overall trending move. Okay, so that's going to be the overall premise today. And we're going to dive into a few different schematics that we can start looking at, and then we can dive into the overall, some examples on price and how that then relates back to even the accumulation video I just did. And you're going to start to see the same sorts of things taking place, and we can use this knowledge to better understand when price might actually be creating a rally-based rally versus a continuation to the downtrend. Okay, so let's get stuck into it. So what we're going to start to notice here, guys, in reaccumulations is they're very, very similar to the actual accumulation patterns. There's some subtle differences. And in some cases, folks, a reaccumulation can actually start to look like a potential distribution. So we can start to see price taking highs, taking lows, and then maybe you think this is the UTAD, and all of a sudden price is melting. And then what does it do? It reaccumulates at the next overall demand area. Now, what we can understand about this is on a bigger reaccumulation, you can actually get into a sell side trade here. And these, in certain circumstances, can actually be really big moves. If this was a reaccumulation off the 1 hour, this would be a really big move down. And then you might then see a new accumulation form. So the one thing we're going to start to notice about reaccumulations, folks, is that we're going to start to see an overall range start to form. We're going to have an EQ, as you can see, an equilibrium, and we're going to start to create then some trend line liquidity. And then again, we'll have this spring, and inside of phase D starts to be another accumulation at demand. So inside of this zone here will actually accumulate orders for the overall bigger reaccumulation schematic. And then all of a sudden we're going to try and get into phase C or phase D, where price then again starts to create its overall block flow. And we can look to say, okay, maybe there's a fair value gap over to the left, and price at this overall supply that is reaccumulating orders, it doesn't want to go lower. And so we can look at the market and target the imbalance maybe to the left as price then is reaccumulating and not actually distributing to the downside. Okay. So this is going to be reaccumulation number 1. It's very obviously similar to your accumulation with your spring. All right. Let's go into accumulation number 2. Reaccumulation number 2 is very similar to accumulation number 2 that we went through last week. And you can start to see that we have this overall demand. We have signs of weakness to the upside, meaning prices still actually making subtle higher highs. We then start making an internal mitigation down to fill the overall imbalance of this overall push. And then price actually, guys, again, creates a lower time frame micro accumulation here. And then we can get into phase C and phase D for, again, our overall expansion, because we have now created a rally base rally on the lower time frames. Okay, so this one here, folks, is going to be kind of more or less like a break and retest, if you will. So a lot of times what happens with these RBRs, guys, is price will break out of an overall zone. And what you're going to be looking for actually is your overall setup in phase A. And phase C is the retest off of now this new support zone, okay? But what we're going to start to understand is we have to understand how price will take some sort of liquidity, break structure again, re-mitigating the actual break and retest of the flip, and then we get a big rocket up and we start getting this mitigation down, and then it continues into phase C and D and E, okay? So I'm not going to spend a ton of time on these reaccumulation phases because, quite frankly, they're very similar to an accumulation. The trickier part about reaccumulations is the first two sometimes look like a distribution because these are happening, folks, inside of a higher time frame supply. So they're actually reaccumulating at supply. And a lot of times people then are looking for these sells down, and instead, what does price do? It takes you out because price decided it's just not going to actually mitigate down any further because it needs to keep fulfilling whatever objective that it wanted to up on the supply side to take out or rebalance the market. All right? So with if you have to go back and review these, obviously these accumulation schematics, you can, re-watch the video and pause it, take screenshots, whatever. But these are what we need to be looking for, and we need to understand how the market in certain circumstances is actually, instead of mitigating down in supply, it's going to create a rally-based rally, and we can use this understanding to our advantage if we see that price actually is creating, or there's more imbalance to the left that is maybe not mitigated, like a fair value gap or some sort of other imbalance in the market, or maybe there's liquidity up there and price is just like, nope, I'm not going to go down, I'm just going to reaccumulate and keep going. Okay, so let's get into some price action and review these things. Okay, so let's look at this overall price action right here. Okay, so what takes place? Well, we're clearly at supply, right? Everyone would be drawing this order block and they'd be saying, okay, we're going to reverse, right? Which is valid. Nothing wrong with thinking that price is going to reverse here, all right? So what ends up actually taking place, folks? Price OFCs to the downside, right? We've talked about that. If you don't know what an OFC is, I have tons of videos on the channel about that. So we OFC to the downside, all right? Which means we've broken structure. So internally speaking, we've broken structure. But what does price do? Price comes into the sell to buy, okay, that caused the new high. So we know, again, if you don't know what I'm talking about, check the other videos on my channel, talk about all of this stuff. So we know that there's demand here, okay? So based on the fact that there's demand here, as price now comes up, let's go to the 1 hour chart, okay? We are now coming into this overall new supply zone, okay? So we've broken structure to the downside. We took internal liquidity right here. So quite frankly, this actually is a valid area to look for sells, okay? Now, obviously based on the higher time frame structure, we're making higher highs and higher lows. So pro trend speaking, you would expect price to make a higher high. But because we're in a higher time frame supply zone, most people would believe that we're going to go bearish, okay? But what starts to now take place? As you can see on the 4 hour chart, this rally base rally on the 1 hour actually is a reaccumulation. And if we go into the 15 minute, we're going to start to see how this overall price action relates. So let's now look at the schematic number 1 that I talked to us about before. Okay, so what do we start to see in phase A? Okay, we retest demand, we break structure to the upside, we retest it again, we then break structure to the upside one more time, and then we actually sweep internal liquidity, and then we reaccumulate for our expansion phase. Okay, so what takes place here, right? We break structure, we've retested this overall demand once, we've retested this overall demand twice, we break structure again. We are now in phase B. Okay, phase B now trends downwards. So we have a pullback into the overall demand, we come back up for supply, and we now are trending again. So we've now just made a high, lower low, lower high, lower low. People are probably thinking, short this market. We're now going down. However, what ends up taking place, folks, is price actually never truly mitigated this overall order block. Instead, it created internal liquidity. Now, inside of this overall price action here, there would be a lower time frame accumulation, but as you can see in phase D and E, we start creating block flow, and then boom, we're just gone. Right? So if we actually dive into the 5-minute chart here, I don't know if I can go much lower, but we're going to start to see an actual accumulation inside this zone. So I can't go to the 1 minute, but as you can see here, guys, you have your signs of weakness, break of structure. We have a retest of our overall demand zone right here. Okay. And then we have another break. Let me just move this. We have another break, and then another retest of the sell to buy that caused the break, and away she goes. So we've actually had an overall bigger reaccumulation phase with then a micro accumulation for our actual phase D and C or phase D and E expansion. Okay, so this is where we need to start understanding market structure. Now, could you have taken a short off this overall phase B zone? Yes, you could have. On a 1 minute or second time frame chart, this actually would have been a really nice trade. There would have been probably a 1 to 3, 1 to 4 RR trade here, and you could have got in, maybe even more than that if you got in here at this high with a break on a chalk here, because there actually was a micro distribution that formed right here. And you're going to start to train your eye to these distributions, and then all of a sudden, boom, we have a retest, we have a flip zone, and we have another, redistribution here, and boom, price goes off, and then you even had another, flip zone perfectly here. So there actually was many trades to the downside that you could have capitalized on, but then when you see the reaccumulation happen at the order block that's not mitigated, as you can see here, the order block that's not mitigated, oh, maybe, just maybe, we actually are reaccumulating. And you would know that once price actually breaks the overall structure. Price now, in this circumstance, has broken the actual overall structure, coming back for unmitigated demand, and you would instantly tell yourself, okay, we just reaccumulated because price from a 4-hour structure perspective had too much liquidity, which looks like trendline liquidity above, and it didn't want to stop. So in terms of the overall price action, this is why now you have this massive move to the upside, because the trendline liquidity was still intact, and we have all this unmitigated price action up here for the overall trend. So this overall order block here wasn't going to hold, because look at what price did. If we put a gain box on here, okay, and we go to the low, this order block was not actually in premium price. So we reaccumulated at this order block here for price to come and sweep all of the objective that's up here out. And then you can be looking for a distribution phase to the downside if you get it. And all of a sudden now you could understand, oh, price needed to come up here, distribute, and now you can be looking for your beautiful trades to the downside. So we can see how we can actually capitalize where you might have got into a nice sell off this order block, But then the overall right here, reaccumulation, would have warned you we probably are going higher for then trend line, liquidity, etc. Okay, let's go find another example. Okay, so let's look at this 1 hour example. All right, so what do we see? All right, let's just review overall price action. Okay, so we have a sweep of liquidity. You can see that wick is just above that other wick there. So we swept liquidity. That's a lower high, lower low. Okay, lower high, lower low. So we are clearly making a downtrend. So what are we expecting? We are expecting price to come into this overall order block. Now this order block is massive. So quite frankly, you'd refine that. You put that at the top of the wick, something like this. Okay, so we'd go there and then we put that at the high of that overall wick because that swept liquidity, and we'd be looking at that being a strong high potentially because of that liquidity sweep. All right, but what do we start to frame our minds at? Okay, what takes place? Well, we have a lot of liquidity here. Look at all this trend line liquidity, and look how beautiful we have of no mitigation up here. So are we believing price is going to continue to go lower? Well, we don't know, right? We don't know, but let's start to look at what's taking place in the overall market. So we've had a couple OFCs, we had mitigation to the downside, and price is now making higher highs, and it actually just swept overall liquidity to the downside right here. So now we have a potential protected low, okay? So with the protected low being there, what are we looking at? How do we know if price is going to reaccumulate or distribute to the downside? All right. Well, in order to know that, we have to go to the lower time frame. All right. So let's go to the 2-minute chart. All right. And let's start to see what takes place. Okay. So what do we have going on? We have another liquidity sweep here, and price is now mitigated. So what is price doing? Okay. Okay. So price makes a higher high. Okay. No big deal. All right. And then all of a sudden, price starts coming to the downside, right? So what took place here? Price broke structure here, retested the overall supply, okay? And because we're in supply, everyone's thinking, oh, we're going down. And if you actually look, price actually swept the overall liquidity of this high, right? Right there. So this definitely would look to me at this point in time like price might actually be distributing to then run all and make a new lower low, right? But what then starts to take place? Price actually breaks structure, okay? It breaks internal structure, creating new demand, okay? And then it accumulates. So let's start to look at accumulation number 2. Okay, what do we have? Well, we have our overall demand zone here. This broke structure. Okay, price mitigates it or taps into it, actually taking out liquidity. Okay, right there. Okay, so what does price do? It comes up, back down, and it just sweeps that low again, right here. So we sweep this low, just sweep that low, creating our spring. We break new structure, as you can see here, phase B. We are trending downwards in phase B, but we don't make a new spring. So unlike reaccumulation number 1, where we create a spring here, we actually respect this overall demand here, and we now reaccumulate on a different time frame. So on the 1 minute or 30-second, and I don't believe I can go to the 1 minute, I'm too far back in price, but you can clearly see that now all of a sudden what do we have? We have our signs of weakness, we have our new demand zone, and then we have a new micro reaccumulation here with your spring right here. So we've swept that liquidity, break structure, boom, there we go. So what we've understood is that if price is going to go lower, we want to start to see structure start taking out these lows and not manipulating the highs. So now if price, guys, has now broken out of this structure, let's go back to the 1 hour chart. Where's our now new demand zone? So now that we know that price has reaccumulated, we would be looking for buys off this new demand. It could potentially come a little lower for this inducement liquidity and come into here, but let's just play this out and see how then price accumulates to go a little higher. Now, whether or not it goes all the way up, we don't know, right? But look at how price now fills this overall imbalance coming into this supply zone. And then we might be looking to short off that supply zone because price has now mitigated all of the liquidity that we had here, the imbalance, and it reaccumulated here to go higher. And you can actually see there's multiple different areas that price reaccumulated inside of these overall demand zones until it reached its overall objective. So there's actually even another one in here, but you can clearly see, guys, for phase E, all this block flow is holding. Now, this is obviously a massive order block, but that is indeed demand. And it held all this block flow until it reached its objective, and then it starts holding block flow to the downside once it's reached its overall mitigation target. Okay? This is the importance of understanding reaccumulation and mitigation, because if you don't understand what this is, where this is inducement liquidity for the overall unmitigated sponsor, and this now we can understand the reaccumulation phases of the market to run all the way up into these zones. Okay? So I don't want to make this video overly long. This series, I want it to be very pointed, but I want you guys to start practicing what these things look like as price is creating a new mitigation cycle, instead of thinking that all of these areas are going to reverse price, and learn how to read reaccumulation so that you can actually ride the market up into these zones properly. All right, you guys, we'll see you in the next one.